Hi, this is Dave with Market Trading Concepts. It is Saturday, April the 7th, and we're doing this video to close out the week for Friday, April the 6th, this shortened Easter holiday weekend. Happy Easter, by the way, everybody. And we're going to take a look at, usually we start out with the indexes, so you know, why change that now? So let's start out with the indexes. Now, we have an interesting situation where, let's just zoom into the daily chart here, and if I can just zoom out to the different levels here. If you notice, I'm going to use red this week because we have a situation where here we closed below the 21 period moving average here, right? So we are less than or below the 21 period exponential moving average. Now, this isn't a decisive break, and we're still at, you know, we've got multiple support levels identified on the chart here, and we're still net long bias here. So we are, you know, against the red, we are blue net long bias. But if you have a look at this, what you're looking at is here you have 1, 2, now 3 closes below the 21 exponential moving average. So on Friday, now you're going to have some exacerbated moves here going into a holiday shortened week. And I guess the futures were trading on Friday here, you can see it. And basically what you had was the market sold off all the way in front of this 12,800 level on the Dow Futures, and then it got, you know, it basically got accumulated or bought all the way up to the top of the range. So in and of itself, we are still net buy, but if you are long side right now, I would be very cautious on the long side now, because you know you've got 3 closes below the 21 period moving average, and you know these are starting to roll over. What you'd really want to see to remain long side is you'd want to see this come back up and get a decisive close, you know, above the 21 period moving average and start to break through these highs to the upside. So I'm very cautious. If I was swing long right now, I would probably close out my positions and wait for next steps, because ultimately, I mean, this is a pretty strong support level here at 12,800, and then you've got this next intermediate support at 12,652, and you know you have a lot of congestion. You have a lot of congestion in these areas, at these swing points. Okay. At these swing points, but what you have here is an area of just you know, congestion. You're just going sideways. You're bumping in between these levels, and then you kind of had a breakdown from that level. So in and of itself, you're still net long. But if you're going to be long side, I think you need to say, okay, this would be my uncle point right here. This would be my uncle point right here. Any closes below this level at 12,652, and all bets on the long side for me would be off. I would be looking at a situation where if it breaks below that, you know, the moving averages at that point would be down here, you know, or they would start rolling back over. I'd be looking at a situation where it does this and then it rolls back over. So realistically, this is my intermediate line in the sand here at 12,800, and if we close below this level here, I definitely wouldn't want to be long. So I mean, you could still nibble on the long side here, but you're really getting signs of weakness in here, or at least intermediate consolidation and maybe a pause to push higher. But I mean, let's look at some of the other charts, and that'll give a better idea of what we're talking about here. Okay, so let's take a look at these charts from the Darvas squeeze perspective, and let's take a top-down approach, starting with the Dow Futures on the weekly chart. So on the weekly chart, as you can see here, let me just change my pen to green because everything here is still bullish. You're still above the 21 period moving average. You're still holding this support level in here at the, I believe that's the 805 level, which you kind of came down and probed it on Friday. You're still, you're still blue on the Hakinashis. You still have, positive momentum on the weekly squeeze. But what, you have a situation where it's, just going to pause the video here. It looks like I've lost my data connection. Okay, I guess we have our data connection back. So let's just pick up where we left off here. You're starting to lose a little bit of momentum on the weekly. You're still net positive on the MACD, but you're kind of in the higher end of the range. If you want to look at this as from an oscillation standpoint, where you get these kind of moves back and forth, you're kind of at the top of the range here on the MACD, but you haven't rolled over here yet. Okay, not to say that you will, but you haven't. You've lost a little bit of momentum on the trend indicator, but I mean, you're still net positive on the weekly. So on the weekly, I mean, no cause for concern there at all. As long as you're holding in and above these levels, you can see you're really just kind of retesting these levels in here, right? But what I'm looking at is I'm looking at potential signs that we might actually, even though we're still buy side on the weekly, we haven't had a major pullback in a long time. And you can see these levels here have been, not sure why this is doing this. I'll just try and kind of work through it. These levels here have been pretty formidable price resistance. We actually haven't broken through them. Now let's see what these levels are here. I'm just going to draw a line here, horizontal line, right around the tops here. So 13,240. Right up in that level, anywhere in these highs here, we haven't been able to break through. So it's pretty normal for a market that can't break through a certain level, even though it's net buy side. If it can't break through a certain level, then what it'll do is it'll kind of look for the next area of liquidity, or it will test if it can't get through a major resistance, it might decide, well, let's come down and test a major support. And where I think that major support is somewhere down in here. The 63 level, 12,663, 12,552, which is this 21 EMA on the weekly chart. So you've got this 552 level, this 12,552 level, and the 21 period moving average hasn't been tested in a long time. Now, I'm not saying we're going to get down there, but when you really look at this, it wouldn't be unusual to have a situation where you do this and then you get a pullback, even if you're going to resume higher. So in the short term, I mean, you can't really project. I don't think it's really reasonable to give a kind of a prognosis or an opinion beyond that level. But what I see happening here is resistance up in here, a possible test of support somewhere down here. You never know exactly where it's going to be. Now, if you drill down here to the daily chart, this is what's really telling the story. So if you look at the daily chart here, I mentioned in one of my videos last week or the week before that you really had this Darvas box setting up. And what I was looking for was, because we were in this consolidation period, I was really looking for direction out of that range. I wanted to see it follow through to the high side because, the daily and weekly is aligned to the high side. But if you really look at this, we had a short signal fire off, okay, at 12,964 to the short side with a target of 12,000, a potential target of 12,682. Okay, so when I see something like that, and I see that we're starting to get multiple closes below the 21 period moving average, we're still net long. So the long side is still intact. But if I think maybe we're going to finally get a deeper pullback, I don't want to really ride that out. What I'd really like to do is say, okay, trading against the trend isn't high probability. But if you wanted to look at a 1-to-1 risk to reward ratio, you could say, okay, I'm going to take a short. The next time it breaks, I think we closed at 12,978 right here. So if, let's say, it breaks this level again, because we've had multiple touches of this level. 1, 2, 3, we broke it, and then it's not unusual to pop back up. If we come back down and we do one of these where we, the price, really shows weakness, and we break through this level 12,964 again, which we're not far away from, okay, we're just slightly above, then it wouldn't be unusual to get at least a test of half of the range of the distance of this box from here to here. So in other words, the Darvish squeeze here is fired short. Well, it hasn't fired short, but it has given a short signal. If you look at the daily, it says we're in a squeeze and we have a Darvish short. That is a short signal. It is against the trend, so it is counter trend. But, the MACD, we had some divergence on the MACD. I think that we talked about in last week's video. And now you've got red Hakinashis. You're in a squeeze, telling you that you're going to get some movement either way. You have a first break of support. So it's indicating that, it even came down here. And it's indicating that it potentially wants to go lower. So it is counter trend. It is counter trend, but these trending indicators take a while to really roll over. So what you really have is this situation where it wouldn't be unusual to, let's say, have a quick sell-off down to this level. I'm at this point in time, I don't really think it's reasonable to expect downside beyond 12,682, which is right in and around this level here on the weekly. So I'm trying to look for some kind of confluence areas, and I see a level here on the weekly of 12,663, 682. So that's within almost 20 points. This seems to be a pretty important level. 12,682. And normally I usually expect, even when a Darvish box is hit, especially when it's against the trend, that you're going to find some kind of support and at least a short-term bounce. So what I'm really looking at then is maybe a short-term sell-off into this level or into this level, okay? And those would be my immediate targets, but then actually looking for some strength, where it kind of finds support and is kind of ready to move potentially higher out of those levels, and get a bounce which would be in the direction, of these trends. So I hope that makes sense. If it doesn't, feel free to send me an email, send me a note, and let me know. I'm spending quite a bit of time on this because really twofold, because really this is kind of a cautionary area here where I don't think I would necessarily take the short signal, but I definitely wouldn't want to be long now that I've seen this print. I'm looking at potential support in this area, support in this area, support in that area, and then a potential resumption higher. So if you are long, just be careful on the long side and expect a potential pullback at this point. Okay, I'm not going to spend too much time on the sister indexes, but I would like to just kind of see if everything is in alignment and if everything's in agreement there. So we're holding support at the 8 exponential moving average on the weekly on the ES. So we're looking at the S&P futures here. Everything else is kind of the same story here. We have the same story here as in the Dow future. So everything looks the same here. You had a short signal here, fire against the trend, with a potential target of 1352 on the S&P futures on the ES, with a short signal at 1386. 1386, where I think we closed at 1390. We're just above that. So I'm expecting some potential movement down into those levels as well. 1324 is 25 points above this. So that's kind of a wide range where you have support, but I'm looking at ultimate support at 1324, intermediate support if it hits this target at 1352 on the ES. And we're in the squeeze as well. MACD has rolled over. Okay, so you had kind of the same story on the S&P futures. Let's look at the Nasdaq futures. So we have this line drawn on the Nasdaq futures as a resistance level at 2,785. We don't seem to be able to get through it on the short side, or on the long side rather. We're doji on the week, and the trend is intact. we're not in a squeeze here like we are on the Dow and the S&P. And we are, we had a first test here of the 21 exponential moving average, which was met with a pretty modest bounce. We came into this level in the last 3 days, it looks like 3 times. We bounced up here, we closed, close to the top of the range here. So we do have red Hakinashis here, but the Nasdaq seems to be stronger. Now, in my opinion, for all intents and purposes, because this is kind of an ultimate target here to the long side, this target I think has been met. This target I think has been met. More than 75% of the target was hit on the weekly chart. So, I mean, that is, to me, good enough. It's been met. So now what we have is we have a situation on the daily where we're holding the 21 exponential moving average. So the Nasdaq is definitely stronger. It is stronger than the other indexes here. Could be because of Apple. We've been having some crazy action in Apple, but it's interesting to note that the Nasdaq, from a chart perspective, is stronger than the other two indexes. We don't really look at the Russell too often, so you've got the Russell in there somewhere. I'm not going to analyze it, but I think this is good enough when you have these 3 indexes to see what's going on here. Now, I would kind of like to see, if we're going to get some downside, I'd kind of like to see this break the 21 as well and print a signal here. Maybe come back to test some of these lower levels here, 26.70, 25.28. I don't think we're going to get down there in the short term. You've got 26.50 here, which is 20 points lower than the 8. So we could come somewhere, in and around down here somewhere if we get some weakness in the Nasdaq. So I think we're kind of seeing the same stuff here, but the Nasdaq is definitely stronger. Now let's take a look at the, from I guess a Dow theory perspective. Let's take a look at the transports and see if they're confirming. I don't really have a clear picture on the transports. You've got some red Hakinashis here, but it's holding above its 21 exponential moving average, and it's just really sideways. We're doji on the close of the day here, on the close of the week on the last day. You have somewhat, I mean, this is sort of a potential double top here, but I think it would be way too early to see that. We're holding this intermediate trend line here. We're holding the 8 exponential moving average on the weekly. We're holding the 21 period exponential on the weekly. So the transports aren't really so much confirming. Now that's not to say that it couldn't just, probe down here and hit those targets that we were talking about and still hold support on the transports, but hit those targets we were talking about, on the Dow future and on the S&P future, right? So I think that's still a possibility. I'm not obviously I'm not a hardcore bear at this point, because we still are, net long side, and it will take days to, if not a week to 2 weeks or more, to change that from a technical chart perspective. So, I'm not a screaming bear, but I am anticipating some kind of a pullback, unless we've already had the pullback. But, that's really what I'm anticipating at this point in time. Now, if we look at the VIX, what is the VIX telling us? Usually when the VIX is low, it's the opposite of the market. So usually when the VIX is low, you have a situation where the market keeps grinding higher. When the VIX explodes to the high side, which means people are kind of getting nervous and they're buying, I guess in a nutshell, for a lack of a better explanation, they're kind of buying puts. So what you'd be looking to see here for confirmation is, you've got a situation here where on the VIX you're in a squeeze with a potential breakout of the Darvas box. If this pops above here and the squeeze fires off long, if the squeeze fires off long, then the market, the general markets, the stock indexes anyways, in terms of the general markets, the general stock indexes are going to push lower as the VIX pushes higher. Okay, so that's generally what you get when you had the short squeeze here and it fired to the downside. The markets, this pushed down, and the markets pushed higher. So this is a potential. This is kind of inverse of the market here. It's against its trend. So it kind of lines up with the story that the stock indexes are telling us. You can see this MACD roll to the high side. So anything on the high side indicating higher in the VIX, you're looking at lower prices in the stock indexes. So this is sort of coming together here, where you have it broke out of this level, and now if you get follow through and you get it printing a long signal somewhere up to, let's say, this level, if you project this out on a one-to-one basis, you're going to get some downside in the stock market. So that looks like it's kind of in alignment. It's still really early stage, obviously. You don't even really have a crossover here, and you would need, this is kind of a reversal pattern. So I think that kind of, coincides with the story that we're telling on the stock indexes. If we want to look for a little bit more confirmation, I think that, the VIX might be telling us a story where we're going to get, some volatility and, a lot of people buying puts and, that increased volatility coinciding with at least a short-term sell-off, which is all I'm really looking for, a short-term sell-off potentially in the stock indexes. So let's have a look at the bonds this week and see what the bonds are telling us. Now, this is a really interesting chart. We were talking about potential shorts on the notes and the bonds. So we had a situation here where we did sell off. The targets were met, and last week's video, if memory serves me, I was talking about a move back into these levels. Now let me just actually change this to red, because we were looking at the short side. So, and what we were looking at was a move back into these levels, into resistance here, okay, which coincided with the breakout point. Well, the breakout point was actually here on the 5-year. And let me just expand this actually, because it's a little bit hard to see. So here's the daily chart, and what we were looking at was these levels here, where you had this, we looked at it from a couple different perspectives, but basically what you had is you had the sell-off, we were expecting to bounce into resistance, and we did get that. So we got this move back into resistance, which we identified as these levels here, and we said, okay, stop would be above, the stop from a technical perspective would be above this bar. So basically what you had here was you had a move into that level. You didn't really get a close above the stop, although it did probe, and then it started working out really nicely, right? It started working out really nicely here, and you had some movement down, a pullback down, and it looked like this trade was going to work out. And then what we were looking for, was a probe or a retest back into these lows, and then potentially for it to roll even lower below these lows. So we were looking at, okay, pull back into retracement into this level, hold this level, and come back into these lows, and then potentially roll even lower. So this is really some people got their butts handed to them here, where the trade was initially working out. And then it's like, okay, once it starts working out, you really have to keep your stop in place here, because this is the risk in these markets. Like what it ended up doing here on the daily chart, it looks like it just put in a higher low. So you got to pull back into a higher low, and then boom, off to the races. This is some pretty extreme action here, where it just came right back up, and it would have stopped you out on this bar here, because really you should have put a hard stop once you're, you probed above it here, and it's okay to kind of keep it fairly loose and just give it some room to move in here. But once it rolls back over, you really need to put your hard stop, above this level here, and you're in the profit, or even, trail it down a little bit. Especially in these markets, I think trailing is really making a lot of sense. Because look at that, you put in a higher low and then bang. You're right back into this congestion area. You're right back into these highs. Now, that said, I'm not looking at the long side. I'd be looking at, getting maybe some further confirmation. But these are obviously really, really volatile markets. And there are obviously some huge things at play here that we can't really, know about. This kind of movement here tells me, when I see this kind of movement here, this tells me that there's some big forces at work here that are pushing these things, through these resistance levels. And, sometimes it's better just to step aside from that. If this trade doesn't work out, or if we're able to catch a little bit of profit and lock it in, and then you get a reversal like that, just step aside and let it unfold and look for, next steps. That's all you can really do. The other thing here that is making me extremely cautious is if you look at, now you're right back on the weekly chart on the 5-year. You're right, above the 21 exponential moving average. And, we did identify that the risk was this didn't cross over, but the daily chart was looking pretty good, for continuation short. You are against the major trends. You are against the major trends on the weekly, although the daily, the trend had rolled over here. So, stepping back and waiting for next steps really, I think, makes sense at this point in time. Okay, and let's just round it out, with the 10-year. 10-year, you had the same situation here. Put in a higher low and then bang off to the races on the daily chart. The other thing I didn't mention in the on the 5-year, but you can see it here. We had some Fibonacci's drawn on here from this high to this low. And typically what you get is we were looking at this 50% level. We were looking at some kind of confluence level between different types of traders where you had a retracement to the 50. You'll see a lot of people get short in this zone here between the 50 and the 618, when you get a down move and then a retracement. And then usually if you get some decisive action or a close above the 61.8% retracement, that tells you that the move is over as well. And that's why you can see that happened exactly here where you had, here's your high, here's your low, here's your 50% retracement, here's your 61.8% retracement, short in this area here. I should actually be doing this red. We were talking about short in this area here. Okay. So short in this area, a rollover, you were in the profit for a little while, but then bang, when it came above this level, get the heck out. It's just not working anymore. There's no reason to hold on and hope that you're going to be right. In other words, a break of that level just basically tells you you're wrong and just move on. And let's just take a look at the 30-year. So the 30-year is the exact same situation. You had the retracement. You were in the profit for a little bit. If you got short, back up to the breakdown point, you retrace back down here and then bang off to the races. The weekly chart is above the 21 as well now. The daily's above the 21 right now again. So you really need to see what the next steps are going to be here. Now if you look at this, just from a chart pattern perspective, this looks like a double bottom potentially, although sometimes double bottoms are supposed to look like that, but it looks kind of like a sloppy double bottom. This is definitely at this point is a higher low put in place. Okay, it's a higher low put in place, and it is in the direction of the weekly bias. So, again, wait for next steps. Okay, let's take a look at Google. I think we looked at Google last week, and if memory serves me, I don't always have time to go back and look at what I said in last week's video And as I get older, I find my memory's not as good as it used to be. So I apologize if I didn't say this last week, but I thought I said like it looked like Google was going to pull back, and I was looking for intermediate support here at the 21 exponential moving average. So you did get at least, a little bounce, and we were saying, usually if I think, if I'm cautious on the market, I would look for, because we had a nice strong trend in here on the daily, I would look for, a bounce at least to 50% of the range from this high to this low. And we did get that. So you had this pullback, it touched the 21, and you had a bounce back into about 50% of that range. Okay, so that did take place. That came to fruition. But now you have some weakness coming in. You wouldn't want to stay with that trade. If I felt the markets had room to move substantially higher, which I don't think we do. You had this sell signal here, but it was against the trend. So that's really what told me on the weekly chart I was looking for a pullback potentially. I would, at this point in time, like if I thought we were going to get, if we were in a stronger market and we had more room to the upside, not that we're not in a strong market, but those weekly targets have almost been met, and for all intents and purposes, they're close enough to their targets that I would have taken profits if I got in close to the breakout point. So at this point, you had this kind of bounce into 50% of the range, and if I was expecting the a lot more strength in the market, I would have held with a stop below here and looked for it to put in a new high, a new swing high. At this point, it doesn't look like it's ready to do that. It came up to this 50% level, it failed, and now it looks like it's starting to roll back over. So I don't think you're going to get this situation where it's going to put in a new swing high. So there's really no point staying with it. That was really a short-term bounce. And that was the expectation, a short-term bounce. Now let's take a look at Apple, and I guess it all kind of makes sense why the Nasdaq is holding up stronger than the other indexes. Look at Apple. My God, I was not expecting that at all. I was actually expecting, here, some kind of deeper pullback. And I think I did say that in last week's video where, if we did get, a bounce back to the 21, a pullback back to the 21 exponential moving average, kind of like what we had here, it would be good for at least a bounce into 50% of the range. But at this point, look at how strong this is. You haven't had a pullback to the 21 exponential moving average in 1, 2, 3, 4, 5. This looks like probably 2 weeks. I'm not going to count all the days, but it looks like probably 2 weeks. Now the MACD is starting to flatten out here in the top of its range, which is kind of the sign of a strong market, where the oscillators, when you get some kind of oscillation, here you're just kind of getting, and that's pretty typical of a strong market where it will just kind of do one of these in the, within the top of the range. So everything is still buy side here. For the love of God, don't try and catch a top and try and short this. I mean, that would be my opinion. I would never, ever try to catch a top and try to counter trend something that is in such a strong trend. You know what I mean? When you've got a strong trend like this, just don't try and counter trend trade it, please. Best thing you can do is wait for a pullback and look for a bounce off of those support levels, because then at least you have a safer trade, and you have support to your trade where you can say, okay, here it's pulled back to the mean, it's pulled back to its let's say it's 21 if you've identified that as a good level, or even it's 8 on the weekly, or even if you're lucky enough to catch a pullback all the way down to here, at least like you can manage your risk where you've got a stop somewhere below that. Because if you were to look at, let's say you were to look at, let's look at it from two perspectives. If you were saying, wow, it's just going to keep going higher and higher and higher, let's say you bought it up here and you had to sit through a pullback all the way down to this level. Well, that's going to hurt. And on the other side of that, if you were to say, well, it's not going much higher, let's short it here, and it does pull way up, that's going to hurt as well, because you're against the trend. So at this point in time, I wouldn't do anything with Apple. I would wait, you know, if I was going to do anything, I would wait for a decent pullback. You would expect at least a bounce off the 21 period exponential moving average to, you know, 50% of its range like we were looking at in Google, even if the market's gonna get weak. Unless the market, something really crazy happens and the market gets really weak and then it just kind of plunges, you know, if we get like some kind of financial crisis type sell-off. And that's why, you know, that's why it's always important. It's always important to manage your risk, and that's why I always look personally for the safe entry, because then I can say, okay, if it comes down to the safe entry here, then I can say, okay, well, you know, you've got some congestion in and around that area. If it breaks below, let's say, this level, then the trade is over. You know what I mean? Because it would take some, you know, some weakness to break below that level. Then I can say, okay, if I'm expecting this much risk, is it possible to get this much reward? And if everything kind of lines up, then it's a good trade, you know, and you're following your rules, you're in the direction of the trends, you know, because I am a trend trader and I like to buy, you know, I'm either breakout momentum in the direction of the trend, or I watch the breakout momentum. You know, breakout momentum would be something like this, where you get a Darvas squeeze. This is, you know, this is my breakout momentum trade of choice. And then, you know, look for, okay, now it's confirming longer, look for one of these pullbacks on the daily chart. You know, so that's kind of how I trade, because this is the safer entry. But, you know, sometimes you will miss the trade. You know, like in here, maybe you had a chance for a pullback, but, you know, when things go breakout momentum, they can run. And then you can buy a pullback on the lower time frame chart, or sometimes if the risk is acceptable, let's say if I'm willing to risk half the width of that box, then I'll just go with it and I'll sit through any heat if that happens, and then with the expectation that I'm going to get, I'm going to make at least, if I'm risking one, I'm going to make at least one, or better yet two, even better yet, you know, three or four. So to me, that's what makes the most sense. So make a long story short, at this point, I don't think there's really anything to do in Apple. I wouldn't buy the high hoping it goes higher, and I definitely wouldn't short it hoping it pulls back, even though the indexes are showing weakness, because, you know, usually you get 3 out of 4 stocks follow the market, but you can have those exceptions to the rule, and that's usually what I'm worried about, is those exceptions to the rule where you get, you know, caught on the wrong side. So safest thing to do, wait for a decent pullback, at least on the daily chart like you had here, and, you know, and try and, you know, get maybe half the width of the range. Or if you think it's going to go higher once it hits, just establish your risk. If it comes back up to 50% of the range, try and lock in some profits and see if it'll go higher for you. So that's, I mean, we're not providing advice, but that's what I would be looking for in terms of, you know, a potential setup in Apple, or in any stock that had this kind of chart pattern. Okay, I'm going to take a look at the dollar index and the euro, but I'm going to start out with the euro because the euro looks cleaner to me. Now, last week what we were saying is here is your kind of no trade zone. And what I thought was happening was, you know, on the euro you have $1.34.99, call it $1.35 to the upside, and you have $1.30 to the downside. So what I thought was happening here was, I thought we had, you know, a push up into resistance, a pullback, we put in a higher low, okay, and then what I was expecting was a move outside into here to put in a new swing high. That's basically what I was looking at. I thought, okay, this was an intermediate higher low, and now we're coming back and we're basically testing this. We didn't quite test it, but we're basically testing the 130 level. Okay, so somewhere on the daily chart down in here, on the weekly chart in here, $1.30. So at this point in time, we're in a squeeze, okay, on the weekly chart. So this is a no trade zone to me, you know, from a macro level, from a swing point, from a swing trading, not a swing point, but a swing trading level. That is a no trade zone to me. What I was expecting to happen, though, was this. You know, you put in your higher low, bang, you're off to the races. That's what I was expecting to happen. but I recognize that, you know, this is a tough area to trade. So the safe thing to do would be to wait. Now you're in a squeeze, and wait for a definite break. I'm expecting, you know, this to be pretty strong support. But if it breaks that, I mean, if it breaks that while I'm in a squeeze, and, you know, this is technically in a downtrend still, although it's lost momentum, it's still in a downtrend. You know, the MACD is kind of diverging, and, you know, this is kind of diverging from the short side. Those are long side signals. So, I mean, you have mixed signals going on here, but if this breaks the 130 level and we get a Darvas squeeze signal fire, then I'm looking for movement down to 126.44 potentially, you know, to retest these lows if we get sufficient movement. Now, I'm still cognizant of the fact that we could do this, you know, come down here, probe below it a little bit, and then still move to the high side and even break out to the high side. Anything can happen in these markets. These are some crazy markets that we live in. Anything can happen, but I have to follow, you know, my technical signals. They're the only things that kind of keep me sane. And that's why I said this is what I think is going to happen, right? But this is kind of the no trade zone, and I recognize that. So if I get a signal that's going to fire to the downside, if I get a Darvas squeeze firing to the downside, I wouldn't fight it. I would just say, you know what, I thought this was going to happen. I was wrong. There's nothing wrong with being wrong in trading. You can be wrong in trading, just don't stay wrong and lose all your money. You know, you need to manage your risk, and that's really where the trick to trading lies, is you really need to manage your risk. So if you're wrong, just, you know, admit it and just get out of your trade and establish your risk. Establish your risk before you get in the trade so that if you're wrong, it just takes you out and you don't have to, you know, second guess it. You know, and that's usually what makes sense. So I know I'm kind of babbling today. I'm a little bit tired, a little bit into holiday mode here. You know, I took Friday off, and I'm back in here on Saturday, so I'm not really quite back into the work groove here. But I mean, what I'm looking at here, all you know, babbling aside, for lack of a better word there, and if I am, I apologize. But for lack of a better description, just stay out of this zone. Wait for a signal to fire. You know, I still think this is possible, but of course this is possible too. And if I get this with the signal, you know, no problem. You know, no problem. Just don't fight it. Okay, taking a look at the dollar index then, the inverse of the euro. Same situation. I mean, you're in this wide zone here. You have some resistance at 80.76, I guess, the top of this candle here where it closed, you know, close to the bottom of its lows. And really, I mean, you're holding in support here. So one of the things that could happen that I didn't mention about the euro is we could just go into a congestion period where, you know, the market isn't really willing to give up the ghost on the long or the short side in either one of these instruments. So that is another possibility. I mean, we are going into a squeeze, which is basically a consolidation sideways period. But what I would really be interested in is, now that we have a squeeze and we've got two dots here, so this is 2 weeks into the squeeze on the weekly, if we get a push below this Darvas box while this is in a squeeze, or a push above it, then those signals are usually pretty powerful. That's my Darvas squeeze setup. That's something that I would not ignore, and I would expect that, even if it's not a tradable event immediately, what I would expect is to give us direction, guidance on the overall direction. So for example, if this fired a Darvas squeeze short, let's say, right, a Darvas squeeze short, I'd be looking for the US dollar to ultimately go lower. If it fired a Darvas squeeze long to the upside, I would ultimately be looking for the US dollar to go higher. You know, conversely on the euro. So again, you're in this zone. I personally, from a swing trading basis, would wait for it to break out of this Darvas box on the weekly chart. The daily chart has a pretty wide Darvas box. It's still, this is coming back up to the high side. It was negative, but now what you have is, you have this low, this sort of higher low, and you really need to wait. I seem to lost my data again, but you really need to wait for more direction on the US dollar and the euro. You really need to get out of that Darvas box range for next steps and for macro direction. Okay, I'm not too interested in a lot of the other currencies, but I will just kind of highlight a few currencies. We were long the Australian dollar before, and we didn't take our profits when we were up, and we did get stopped out. When it came down to support here, it really wasn't worth holding on to those options. So that was going back a couple of weeks, and now what you have, you can see in the Australian dollar on the daily chart, you actually had a short signal fire here. Where it fired a short, it bounced up, almost would have stopped you out. Right at the top of the range. And then it just kind of followed through there. And now you can see it's been stair-stepping lower, the series of lower highs, lower highs and lower lows. So you can see that, you can see that stair-stepping taking place in the Australian dollar now. And you can see from this Darvas box here, you had a squeeze here. You had basically a Darvas squeeze short signal at 103. Okay, and you can see here on our radar screen on the daily, it fired about 4 days ago. Okay, so if you zoom out now, let me just clear this off. And if you zoom out now, you have a potential target. You have a potential target of 1 even, on a best case scenario, at least in the short term. So you have this target here around 1 even. So I'm having a lot of problems with my data connection, so I apologize if this video gets a little bit jumbled up, just like Murphy's Law right there. But you had this target down here of about 1 even in the Australian dollar. So I'm not really that interested in too many other things. I just thought I'd point that out since we did have a signal fire. I'm going to pause the video recording here and see if I can get my data back online, and then have another look at some of the other currencies and see if they're worth talking about. Okay, so trying to get my data back here. So we had this target in the Australian dollar of about 1 even. Now let's have a quick look at the British pound, and I really don't have much of an opinion on that. That to me is, it's in no man's land. There's really not much to do there. It's still holding some of those levels there. It looks like it has some pretty strong resistance, price resistance anyways, around $1.60. I know $1.60 is key level in the British pound, but we're really, on the weekly, we're above support. On the weekly, we're above support. On the daily, we're right at support. There's really not much, in my opinion, to do there. Okay, taking a look at the Canadian dollar. Canadian dollar had an initial long signal that we talked about going back a number of weeks. Same situation as the Australian dollar, couldn't get through that resistance, hasn't really broken support. It's just really in a tight range. And this is something that, it happens from time to time where, we always expect the markets to trend. And we're always expecting, it to go one way or the other. But sometimes, you look back 1, 2, 3, 4, 5, 6 weeks now, it's just been going sideways. And that is something that, it happens. Like, look at the daily chart. We had a short signal fire in and around here. It was against the trend. Not really interested in that. You really want to see some trending, and that's why sometimes it's good to wait, even when you get, it's good to be patient, even when you get a potential breakout momentum signal like the Darvas squeeze here. In this case, the Darvas squeeze long. Sometimes it's better to wait for some decent trending to take place on a lower time frame chart, and then wait for the pullback, into your rising support levels, because because sometimes this is the risk. We're always expecting the markets to trend, but they can go sideways, and that becomes a real problem. Now, the moment that you peg that the market is going sideways and you start saying, well, here is resistance, here is support, I'm going to, sell resistance and buy support, the moment that you peg that, next thing you know, it's going to break out, and, it just takes that one time for you to get your head ripped off. So I net like to trade trends because they're just easier to trade, and they're a lot more fun to trade too. Okay, let's take a look at the Japanese yen. The Japanese yen looks interesting here because we were saying, like, it's been extended in our last videos. We were saying it's been extended for a long time. I was cautioning about being being short the Japanese yen, even though everything looks net sell side. Come on up, buddy. I'm just talking to my my little Boston Terrier here, Pistachio. He wants to jump up here with me. Okay, so basically we were saying, okay, let's not really look at the short side anymore because we're pretty extended. I wouldn't be surprised if there was, a snap back into these resistance levels, either here or here. So we had this pretty significant move, of about, let's see, I guess that would be about 200 ticks higher. So I'm sure that 200 ticks would stop out most traders if they were short and they had to take 200 ticks of heat. Pretty sure that would stop out most traders. So if you look at that, now we're into this resistance level on the weekly, but on the daily you have to be careful here. Even if you're thinking of getting, potentially short into this resistance level, you have to be careful here, because if you look at the daily, you had this, it's looking back at the top of this Darvis box, and we had basically a Darvis squeeze fire off. It's against the trend. Okay, it's against the trend, and it basically hit its target here. If you project this out on a one-to-one basis, this Darvis box from, let's say, 0.1, and this is 0.2. So from 1 to 2, 2 to 1, if that makes sense. Basically, this distance here, project it higher. Okay, you basically done that. But now what you're doing is you're still in a squeeze. Your Hakanashis are blue. What this is telling me is that you still have some potential to the upside. You've closed above the 21 period moving average on the daily chart. You're still in a squeeze. It hasn't even fired. If that fires, you could still, you could get some more movement to the high side. So at this point in time, I would not be interested in shorting into these levels. I mean, you have congestion in and around this level, but this is so overdone that I'd probably wait for it to pull back into like 125.54 at this point in time, the 21 exponential moving average on the weekly chart. I'd be looking for maybe a push back up there. So 125.54 would take you, somewhere in and around these levels. And I would look at those levels and I would look to say, okay, if we get into these levels here, right? If we get into these levels up here, let's say, a little bit higher, actually right in here, somewhere in here, I'd look at the price action to hit these levels. I'd establish this as my resistance level, and then I would look at like a 60-minute chart and see if we start getting some weakness. And I would wait for, some confirmation that it's not going to get above these levels. Once it starts rolling lower, I would look for a sell signal on a lower time frame chart, and then I'd place my stop above the resistance, and look for some kind of a swing point, to place my stop above and look for it to roll lower. And when I started to get in the profit, what I would do is I would start to trail this down and lock in some profits in case it just snaps right back up, like it did in the bonds, for instance, as we were talking about earlier, and just takes you out of that position. So, I mean, I think patience is key in this market, and I hope that made sense. But I think it looks like we're going to potentially get some more upside here. I mean, that's what this is telling me, and that's kind of what my gut is telling me. But we're net sell side on the weekly, and we're sell side on the daily. but I wouldn't be surprised to see a, you know, a higher pullback into these levels. Now, as a matter of fact, let's look at, you know, where potentially this could go, and let's look at it from the Fibonacci perspective. So let's get some fibs on here, some price retracement lines from this high to this low. Yeah, and if you see there, this is what I kind of like to look at. I'm looking at, you know, all my other stuff in my gut and my experience is telling me, you know, that we have a you know, potential move higher still. We still have more room to go higher. And if you look at it from the Fibonacci perspective, a 50% retracement would take it right into that level. See that? So I like to look at this and say, okay, you know, the Fibonacci traders are looking at that as well. That's probably going to be a key level to them that they're looking at. The moving average traders are looking at probably this key level here. Where these levels come together, these kind of confluence levels where all these different levels come together, to me is probably a much stronger level, you know, because you have more people looking at it. It becomes more a self-fulfilling prophecy. So I kind of like that. So if you look at it from this perspective, I think it's pretty safe to say if you get the you know, the fib traders looking at that, they would look at a short in this range, you know, from 125.33 to 126.84, and they would probably place a stop above 126.84. So to me, this makes the most sense. If you get some definitive closes above 126.84, I think it's safe to say that trade would be over. Okay, so I'd be cautious on this. Like I said, I'd look for a move into those levels, and then I'd look at a lower time frame chart for it to move lower. I'd like to see some some lower highs put in place and some lower lows, and then maybe place a stop above the high point and then trail it down, you know, and try and lock something in just in case it snaps back on you. Hope that makes sense. Okay, we're already almost an hour into this video, but I want to spend some time looking at gold and silver. I'm going to start off with silver. I had a couple of members join my live trading room floor, and one of the members is interested in silver, and we really looked at it in depth on a number of days this week. So I want to just kind of recap some of the things that we were looking at and some of the things that we were talking about from a couple of different perspectives. So looking at silver here, what I see and what my opinion on silver is here is, okay, let's start with the daily chart. The daily chart, I think, is a little bit more telling. So starting with the daily chart of silver, you have this low that was printed at about, I've got it at 31.07. And then what it did was, I thought when it came up here, and it basically, it just probed above this high here, and it put in, you know, it tested it, it just probed above it, and it came down, and at this point here, I thought it put in a higher low. Technically, I guess you could say it did, because it held that level and it pushed higher, and it pushed above this level, and at this point I said, okay, we have now a higher high in place, right? We have a higher high in place. So what I was looking at was one of two things. I was looking for this higher high to maybe come a little bit higher, up here somewhere, or for it to pull back a little bit, right? And not violate this higher low, or, you know, here's my line in the sand right here, not to violate this low, and then to push higher. So I thought, in essence, what we had was, and let me just zoom out a little bit here on the daily chart. So I'm going to maximize the daily chart here. What I thought we had here was a potential reversal take place. I watched this pattern quite a bit, you know, where we have, you know, here, you know, you've got a potential, here you've got a potential higher high, you know, higher low, and then another higher high. So that's what I was looking at. But then what ended up happening was, it probed above this, and then it came down, it violated this higher low level here, right? And then it came all the way down and it probed below this level. So at this point, I mean, technically we are sell side on the daily chart. We are sell side here. Okay, your MACD is below the zero line. Okay, but to me it looked like a bottoming pattern and a potential short-term reversal taking place. So that's what I was looking at. So when I look at it from that perspective, I was expecting a potential reversal to take place here and to maybe come back and retest maybe somewhere in this area, let's say, to retest this more major resistance at, like, 34, just above 34. But to be conservative, let's call it the 34 level. So that's kind of what I was looking at, a potential move back up somewhere in there if this higher low held. So at this point, you're in a position where, in my opinion, now you've got, and I mean, this is something that you really need to do. The market changes, and you need to change with the market and look at the signals it's presenting. So what I mean by that is this. So now, within the last 2 days, I had a signal fire here where we have now a valid Darvish squeeze short signal. Okay, it's hard to write with a mouse here, but this is supposed to say Darvish squeeze short. So now we probed below this level, we triggered a short. So this is the line in the sand to me. This is the key level here at 3107. Okay, 3107 in silver. If this follows through, it's not unusual to get a bounce, 50% of the range of this big down bar here, okay, and then to roll back over. So if this follows through, I'm looking for a target of, I believe that says 2897 half. So, 20, let's call it 29, okay? Let's call it 29 just to make it a little bit easier. So if this signal follows through, this short signal, which technically is in the direction of the trend, this reversal signal that I was potentially looking for was against the trend. So I'm not surprised when signals, or when I think a reversal pattern is taking place against the trend. I wouldn't be surprised if it failed, just because it is against the major trend on the daily chart. So if if I recognize it and it follows through, that's great. But if it fails, you really can't be that surprised. So right now, basically what we're looking at is if 3107 gets violated again to the downside, that is really where I would expect long stops to be. Okay, if anybody is long this move, they're probably going to say, look, 3107 it coincides with these lows, it coincides with these lows that held, and now it's just becoming a situation where you've touched it once, you've touched it twice. If it comes back up again and it breaks that level, and it breaks this level decisively, it's probably going to fall right down to here. Now that level in gold coincides with about 1550 to 1560, as we'll soon take a look at. So at this point in time, the path of least resistance in silver is shorter. Now where it becomes a little bit tricky, is if you look at this from different perspectives. You can really mess yourself up here. So let's look at this from different perspectives. Now, let's say you're of the opinion that gold gold and silver is in a long-term uptrend, which you can sell me on that. I buy that. It is on the weekly charts. They are in long-term uptrends. So look at this. Now you've got I'm going to call it this swing point low, and now you've got this swing point high. Okay. And then let's look at this from a Darvish squeeze perspective, from a Fibonacci perspective. So now you've got, let's put some fibs on here. It's easy to grab it right from the the Darvish box. It's telling us where the highs and lows are. So let's use the Darvish boxes here. Bang, you've got this. Now you've got a 50% retracement, okay, of this major you know, if we consider this a minor downtrend and this the more major uptrend, so you've got, here was an uptrend, now you've got a minor downtrend in the direction of this, you know, counter to this uptrend. Okay, so let's get a little bit creative and artistic here and say, here's your uptrend. Okay, here's your uptrend, and here is your downtrend. Okay, your minor downtrend against the uptrend. Okay, let me clear some of this off. It's getting a little bit messy. So now if you look at that, you know, you could sell me both ways on this market. Now where I think it's tough to, where it's really tough for me to fight that is when I see a situation like this where it's like, okay, you've had this kind of major uptrend, minor downtrend. It's not unusual to look for a bounce at the 50% retracement, which here is about 31.85. Now, if you look at that, I mean, this is kind of messy, but if you look at that, when you had this pullback here, and this is about where it pulled back right there, 31.85, okay? So the first test of that pullback of the 50%, you did get a bounce in here. You got a bounce here. You even had a secondary bounce here, okay? So if you look at that, let me just zoom into that one area there. I'll just have to, okay, let's zoom into this one area here. So I'm going to make the chart bigger. Now, if you look at this, let's say I'm long side. I want to be long side when this comes into the 50% retracement, 31.885. Now, this test here, in and around this area, it basically held that, and then you got a decent bounce out of that area here. You know, 1, 2, 3 bars. So you had a 3-day bounce out of that area, okay, to the upside. Then it came back down and it broke below it, but you still had a bounce back up into this area. So you had two opportunities on a short-term basis to trade this to the long side, even though everything was, you know, short side bias here. You had two pretty decent opportunities, or actually, geez, you know what, you even had 3. Okay, so here was your first, here was your second, here was your third. You know, you could have caught bounces off that 50% retracement. So now what ends up happening is you have the 61% retracement, or the 62 roughly, is around 30.55, let's say. 30.55 down in this area here. So typically, if you're going to look for one of these kind of retracements into this, some people call it the ambush zone, but between the 50 and the 616, basically the 618 or the 62, if you hold this level and push higher, that's great. But if you break the 62 level, the theory goes, if you break this 62% level, the theory goes that this is now going to be your resistance, and the long move is over, and now you should be looking at the short side. Okay. That's kind of the, you know, the fib theory on some of the people that I've learned some Fibonacci work from. That's sort of what they look at. They look at, okay, if you get a pullback into this area, look for a bounce, okay, from the major high to the major low to the major high. You know, look for a bounce. Well, you got that. You got that 1, 2, 3 times. Now, if it breaks below this level here, 30.55, let's say, it's probably, you know, you're probably looking for some downside targets. So let me just clear this off and look at it from some of the setups that I use. So by now, if you've been watching me more than once, you've heard me talk about the Darvas squeeze. So now on the daily chart, we had a Darvas squeeze fire here. When it probed below this low, we had a Darvas squeeze signal technically fire at, geez, what is that level? Just below 3107, right here, 3107. It's right in this level, and I apologize. It's really, you know, you've got some text overlapping and stuff like that. It's hard to read. But now, what it's telling me, if this follows through, you've got a short side target of $29, let's call it. Okay, $29 in silver. So even if long-term silver is going to go higher, if this signal follows through, which it looks like it might, okay, because you've got red Hakanashis here. Now you're in a squeeze, okay? Now you're in a squeeze. You should get some movement. This is the MACD's below the 0 line, and it looks like it wants to cross back lower. And technically, your daily trend is in agreement as well. Okay, all of these things are in agreement for a potential move lower. So it's not uncommon to get a bounce. Okay, for it to roll up, let's say 50% of the big move, or even 50% of the width of this Darvis box. So here's your Darvis box here. You get an initial signal, a push back up, okay, knee-jerk reaction, and then next thing you know, the second time it comes through that level, boom, it follows through. So that's what I'd be looking at. I wouldn't take a fresh short, but where I would look to get short is if it comes back up, right, which it's done, and it crashes right back through that signal line or that signal level of around 3107. Then I would look for a potential short. I'd look for a short potentially with a move down to the 29 level. So I mean, I could sell you on both sides of that, but what we've seen happen is ultimately, you had the bounces from the for the fib traders. Let's say that we're trying to buy this major pullback of the major trend and a pullback of the minor trend against the major trend, or the intermediate, major and minor trend. But now you have a clear signal here. This is fired, and the follow through of that signal to me is a go with. So that's basically what I'm looking at. Now, if this low holds, and this low holds, okay, and it doesn't come back through that level, then what I'd be looking at is for a continuation of this potential reversal pattern that we thought was originally forming. Okay, now we thought this pattern was forming obviously before this signal fired on Thursday. This is a recent signal, so you have to weigh the new evidence and compare it to to your presumptions before. A couple days ago I thought, okay, look, we have a potential reversal taking place. It is against the trend, etc., etc. Here's my line in the sand here. If it breaks this low, here's my initial line in the sand. But ultimately, if it breaks this low, and by breaking that, I mean a close below that, okay, a decisive close below that level, then, all bets are off, in my opinion, right? So we had it pro below it, it bounced higher. If it breaks it again, then I think this Darvis squeeze is going to follow through. If it doesn't, then what I'd be looking for is either some sideways action in this range, because markets can move sideways, or I'd look for continuation above this level to the high side. So, I mean, those are basically your decision points. Your decision points are, short below this level, or, look for it to hold that level and push higher. I mean, I hope that makes sense. So now, if we take a look at the weekly chart of silver, basically what you have is you've had the 8, okay? You have the 8 crossing below the 21 on the weekly chart. It's a new signal. I mean, within the last 2 weeks, right? And you have 1, 2, 3, 4 weeks. 4 weeks that have closed below the 21 period exponential moving average. So when I look at that, and I look at the preponderance of evidence in front of me, I think it's starting to favor the short side. Let's just put it that way. Silver in the intermediate term, even though it's been long term up, it is starting to favor intermediate, at least the short side. Excuse me. And we've had 4 weekly closes below the 21 exponential moving average. This is favoring the short side. We still have long bias here. So this is short bias. This is long bias. This is kind of, it's below the 0 line, but it hasn't crossed back over yet. So this is kind of, this is kind of in the middle now. But what you've had is you've had one bar lock in here on the trend to the short side. Okay. So when you look at those factors together, along with the the daily factors, I think that I would probably I'd be very cautious, but I'd feel comfortable doing a go with on the Darvis squeeze based on the daily chart if we broke that 3107 level and just going with it all the way down to 31 to 29. So you've got about $2 of downside potentially in the silver. So at this point, that's kind of what I'm favoring. But I wouldn't do it unless we broke what I consider fairly strong support at these levels that we've identified, which is right at your signal level. That's right at your Darvis squeeze short signal level. So I'd probably want to see on a 60-minute chart some decisive closing below that level before I was willing to take a short. So I hope that makes sense. Okay, let's have a look at gold. Okay, if we look at gold, let's start top-down approach from the weekly chart. So it's kind of the same story where you had this long signal that failed. Okay, you had this long signal that failed, and that at the time was kind of a reversal back out of here, and it just didn't follow through. It pulled up a bit, and then you had I believe it was Bernanke came out at some point here. I think it was this day on the daily chart, and just crushed gold. And that's when gold began this daily downtrend several days later. Okay, so if you look at this, let's stick to the weekly chart here. So what do you have? You have 1, 2, 3, 4 weekly closes below the 21 exponential moving average. Okay, you have the 8 cross below the 21. Okay, now you've got red Hakanashis. You're above the 0 line, but this is crossed to the low side. This is short side, short side. This is still long side, but it looks like it wants to cross to the downside in gold. Now let's go to the daily chart here. You had a more decisive signal, Darvis squeeze short at 1630. Okay, and this is what makes it tough. You had a Darvis squeeze short at 1630. You can see it probe down below here. It closed decisively below that level. Now it's right back up. It closed right at the 1630 level. So you've got red Hakanashis. You have a short squeeze to the downside with 1 day loss of momentum. Okay, so this is favoring the short side. This is favoring the short side. This is crossed to the low side below the 0 line. It's favoring the short side. And this, your daily trend is favoring the short side. Okay, so on the daily chart, it looks like it wants to go lower. You have a potential target in gold on the daily chart of 1560. Okay, you have a potential target of 1560. 1560 on the weekly chart takes you down, right down into these levels, which are pretty strong swing. At least they're fairly strong price levels on the weekly chart. So basically what you'd be looking at is maybe a test of the bottom here in the intermediate term. Do I think that's doable? Yeah, I think that's doable. And I think what you would really be looking at is you'd like to see, in order for this to follow through, you'd need to see it just, close below that level, and then you could probably go with it, with a stop above that bar, or stop above the 21 exponential moving average. I think you'll get like probably a 2 to 1. A 1 to 2 risk to reward. Okay, so you'll probably risk 1 and looking for a 2 reward. So risk $1 to make 2. I think you've got enough room in there potentially for that to make sense. Okay, so the gold is a little bit, I think, more telling. It looks like it wants to go lower. To me, it's broken these major price support levels. It's broken the Darvis box a little bit more decisively, and I don't think it would be, its target coincides with these price lows here, this swing low on the weekly chart. I think that's really doable. Will it happen? We can never know, but I think that's what the preponderance of evidence is kind of pointing to. Okay, let's take a look at the grains and wrap this up on this holiday weekend. The video is already at 1 hour and 20 minutes. I apologize for that. There are a number of things that I really wanted to look at there in detail, and I have a tendency to repeat myself, in an attempt to get my point across and to try to be more clear. As you're talking, it's kind of hard to know if you're really making as much sense as you think you are in your own mind. So that said, let's jump into the grains and then wrap this up. I don't want it to go too much longer. So we were talking about soybeans having a really nice uptrend, and they were really leading the grains higher. We talked about this pullback would make sense to buy, and then you had a push higher. You had another test of the 21 exponential moving average, and then you had this almost this limit up day, and then you jumped up above it, and now you're pushing to new highs. So the soybeans look really strong, and I think the next pullback to the 21 exponential moving average would probably be met with some buying support. So the weekly chart looks strong as well. You're holding above the 8 exponential moving average. I think this trend is probably going to persist for a while. Let's take a look at where we think resistance might be on the weekly chart. So on the weekly chart, I think your resistance is really these price highs. Let's draw a line in there and see where those levels come in. Horizontal, you've got really the top of this Darvis box coming in at about 1456-ish. 1456-ish you're at. You closed at 1334. Is that right? 1434 is where you closed, and you have potential room to the upside to 1456. So you've got about another 22 points to the upside. Based on the strength of what I'm seeing here, based on the strength of what I'm seeing here, I think we'll probably come up and test those highs. Now, would I expect it to just blow right through there? Probably not. I'd at least expect it to hit this level and either go sideways a little bit or at least pull back slightly from that level. So just be careful if you are long and you get some more upside movement. Try to lock that in so that it doesn't come back and and take you out of the loss. Try and lock in whatever profits you might have made on that at this point in time, because you're getting your kind of room to make a profit is getting smaller and smaller by the day there. So let's see, and you have a lot of price congestion up and around that area, unless you get like an extreme situation where a report or maybe a major stop run for people that they've been short for a long time. Although I don't know why anyone would be short back through this above that level, but let's say there were people that were short and they held on. You might get kind of a blow off above there, but I'm not really expecting that. I'm really expecting this to be resistance and to get a pullback from that level around 1456 on the weekly chart. Okay, let's have a look at the corn now. The corn, the trend isn't really that strong in the corn. It's kind of sideways on the weekly. You do have a long squeeze that fired off here. You've got red Hakanashis. You kind of got some mixed signals here. These are coming in bullish, even though this is below the zero line. But we talked about last week this one crazy, crazy limit move where it looks like it did go limit up, and then this was on the Friday. Okay, so that was last Friday, and then you can see it just continued to have pressure for 2 days to the upside, so that anyone who was caught short over the weekend here in this long squeeze, which is essentially what it is, or short squeeze, the shorts were getting squeezed out of this move, with this turnaround to the long side. They felt some pain here. You can see how it gapped up on Sunday night into Monday, because the grains open on Sunday night, and then it pushed higher. And it pushed higher, and then it started to ease off a little bit. But it's still really in the top end or in the middle end of that kind of gap up range. Where it gapped up and it kind of stayed up there. So at this point in time, I think this painful move for anybody who got trapped on the short side is probably over, and they've been blown out of their positions. So I would really look for next steps in the corn. It's not trending as nice as the soybeans are. So let's take a look at wheat and see what that's telling us. I'm not going to pause the video as I switch over. Let's just jump right into it. We've got a lot of squeezes taking place and potential breakouts on the Darvis squeeze. So let me just clear this off. Yeah, wheat looks just sideways. I mean, I think I'm more bullish than bearish on it, even though we're even though we're against the trend on the weekly and we're starting to be against the trend on the daily, I don't think we're really going to go much lower. I think we're just going to go sideways to higher, based on what I'm seeing in corn and based on what I'm seeing in soybeans. I think the down pressure, these weekly lows that were put in place over here, are over. Now that said, we did have a weekly Darvas squeeze fire off here to the short side at 626. Let me just see how that kind of plays in. But, I mean, just and I could be wrong, but just my gut tells me, just my gut kind of tells me that because soybeans are so strong, I guess mentally I'm just ignoring that signal. It did print when we had a probe on this day, but you see how it got bought right back up to the weekly highs? It's kind of hard to see, but it did get, it probed and then it got bought right back up to the highs there, and now we're above the 21 exponential moving average at 655. Where did we close here? We appear to be, let's see, I'm sorry, we're at we closed at 638 on Friday, so we are below the 21 exponential moving average. The only way I would get interested on this, because it's kind of counter to what soybeans are doing, and the grains tend to sort of like to follow each other. If we actually had a decisive close below 626, then I might say this might follow through. This signal might actually, this short signal might actually follow through on the weekly. At this point in time, I would wait for next steps. I'm just looking at sideways action here. So, unless the move in soybeans is over, like if we, let's say we peg that level 22 points higher in soybeans that we were looking at on the weekly chart, and then this started, and soybeans wasn't getting through that resistance level, and then wheat started to push below 626, then I'd say, yeah, that's probably a valid signal, because everything would be in alignment then. You'd want to see a red Hakanashi come in here, and you'd want to see the price follow through below 626. Then I would say, yeah, you might want to look at that as a short in wheat. I personally wouldn't, swing trade the grains. I don't really like to swing trade the grains, but looking at it from that perspective, it would make sense. But until it actually does that, I'm kind of in no decision zone. I would just look at it and say it's probably, just going to go sideways unless that were to really follow through and look, interesting when it got to that level to the short side. So that's all I have this week. We're at an hour and a half. I apologize for the length of the video. I hope the analysis has been helpful in kind of letting you know what I'm thinking, my thoughts on what the market is going to do, my thoughts on where the market is at. We'll reconvene this again next Saturday, and until then, I hope you have a fantastic Easter weekend with your family, and good trading into next week. Just be careful. Be careful on a lot of these trades. We're probably going to get some volatility coming into the markets. Even if you're right on the trades, some volatility can spike you out of those. So just, pay attention to the level of volatility that's coming into the market, and just pay attention to, the geopolitical events that are coming into play, and just try to, if the markets are too volatile, even if you're ultimately going to be right, but it's just too volatile to trade, there's nothing wrong with just sitting back and watching. I think we're going to start getting some volatility in the markets, and I'm actually looking at, potential short setting up in most of the markets next week, as a summary point. Based on some of the things I'm seeing, I'm looking at, some intermediate short-term shorts coming into the market, and then I'll kind of reevaluate from there at the close of next week. I'll look at what my intraday signals are telling me during the week, and then we'll reconvene next weekend, and we'll reevaluate what the major signals are telling us and where we think the major pressures are. So just be cautious. If you're long the stock indexes, especially, be cautious. Recognize what your uncle point might be, even though we're net long. We could get some, some pullbacks, some intermediate pullbacks as well in the metals. We could get some intermediate pullbacks below those key levels that we, that we analyzed and that we kind of identified there in both the indexes and the metals. And yep, have a fantastic Easter weekend with your family, and good trading, and we'll see you next week.